The online luxury marketplace 1stdibs is set to go public on the NASDAQ today. Price 5.75 million shares at about $20 apiece. Joining us now, first on CNBC, is David Rosenblatt. He is the CEO of 1stdibs. And David, good to have you. Congrats on the IPO. And let's get right to the business in the short time we have. You know, your growth rate increased dramatically over, let's call it, the last year. I think you grew 16% from 2019 to 20. But, you know, March of 20 to March of 21, that quarter, up 43%. Can you sustain that kind of growth, or was that perhaps more the result of people at home as a result of the pandemic who are now, you know, not on their computers as much?
Yeah, listen, David, first of all, thank you very much for having me on the show. You know, from my perspective, we certainly did benefit from work from home and COVID in general. On the other hand, you know, I think it's pretty clear that COVID simply accelerated a long-term trend that was already in the midst of happening. Furthermore, you know, we're super early in the adoption cycle of this industry by digital. You know, we have a tiny percentage of the market which has begun to move. And secondly, when we look at a more bottoms-up, from a more bottoms-up perspective, at the behavior of the customers we've added since the onset of COVID, those customers have demonstrated better engagement metrics than the cohorts of customers we added prior to COVID. So I think, as with many things that have to do with digital, the world is not becoming less digital, it's only becoming more digital.
Yeah. All right. So for those people who are watching today, who are new investors, obviously, in a public company, what are the metrics that you feel that are most important? Is it engagement? Is it average price? Is it having more and more sellers on the marketplace?
Yeah, I mean, what we optimize for is growing GMV. We're hired by our sellers, essentially, to produce digital demand for them. And so that's, you know, we're in the business of generating GMV. I think secondarily, we also focus on adding new customers to benefit from this secular shift that I described.
$387 million in GMV for the 12 months that ended with the March quarter. David, what kind of growth rate can you point to here?
Yeah, listen, again, I think we're super early in the conversion of this industry from offline to online. You know, we did roughly 345 million or so of GMV last year. We operate in a $129 billion industry. So I think we've got a very long road ahead of us, and it's extremely early innings. That conversion to digital has been accelerated by COVID. But again, as we see from the engagement metrics of those customers we've added since over the last 15 months, they're healthy, they're engaged, and we expect that to continue.
Yeah. Finally, David, you're no stranger to the capital markets in a way. Obviously, you sit on the boards of Twitter and IAC. I'm curious, I would assume you were approached to go public via SPAC, but you chose the traditional route. Why?
So we evaluated both direct listings and SPACs. In the case of direct listings, it was important to us to be able to raise primary capital in addition to simply being public, and that isn't possible right now. In terms of SPACs, we did take a look at it. We felt, though, that there were a lot of benefits associated with the traditional IPO process. Specifically, internally, we felt that we would benefit from the higher diligence requirements of going public via IPO. And externally, we felt that the business and we would benefit from educating the buy side. And we've done that through hundreds of meetings over the past weeks and months.
All right. Well, we look forward to following the progress of the company, David, and certainly appreciate the brief time we had with you this morning. Thank you.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.